Wee Liat is a regional head of property research at Samsung Securities. Wee Liat, thank you very much indeed for joining us. What did you make of these figures here? It's basically what Beijing wants, isn't it?
Well, this is the first time that we've seen since 2008 that we have more than half of the cities out of 70 which has property price decline. We have 49. And this is just like in 2008, where we have in December 2008, 50 cities have price decline. We are certainly on a downward pricing channel. We are projecting that property price next year will drop about 15%.
Really? Because, I mean, if we look at, let's say, these major markets, the Tier 1 cities, Beijing, Shanghai, etc., we're basically flat on last year, aren't we? We may be declining month on month, but from the comparatives in 2010, slightly higher, probably.
Right. On a month-on-month basis, it's actually a leading indicator of the year-on-year data, because year-on-year you have a base effect. So if you look at the situation now, going into next year, we're definitely going to see on a year-on-year decline in the property price in these Tier 1 cities. We're already seeing developers cutting price pretty aggressively, especially in the suburban projects.
Yeah, that's happening. That's not fed in yet, though, has it, properly? Why?
Well, I think most of them has been fed in because this price data is based on primary transaction volume. But what we're seeing in the market now is that the secondary market may not have dropped as spectacular amount as the primary market, because I think the secondary market
time to feed through.
Yes, you also have the fact that the home buyers are holding power. Those who have bought second hand are still holding on to the property.
So we're not going to see actually a massive slump when it comes to Chinese property. That's something, I mean, everybody's fairly confident that Beijing authorities can actually manage this. Are you that confident?
Well, I think that the government is actually starting to look at on the downside. Despite the fact that they want the price to come down, I think what they want to see is soft landing. What we are seeing is that some of the local city government has actually started to relax the mortgage rates of the first-time home buyers. I think this is a good sign. They want some of the volumes to come back for the first-time home buyers. Definitely not the investment demand, but they want to see some recovery in the volumes from now.
And they want to increase the supply, don't they? And they, of course, have this quite amazing investment program when it comes to that.
Yeah, that's interesting, because if you look at the latest policy statement, they highlighted that they want more supply of the mid to mass market projects private into the market next year. If you want to have more supply, you need to stimulate the demand side of the story as well. So what we're seeing is that they want volumes, but they want it in the small unit size and mid-unit size levels.
Okay, let's talk a little bit about how this actually makes itself felt. Do we see more relaxation taking place in Tier 1 cities? Because we haven't seen that yet.
I think the relaxation will apply to Tier 1, Tier 2, and Tier 3 cities, but the criteria is that they want to stimulate first-time home buyers' demand. They want to have more home ownership. And
keep people happy, basically. That's the idea here.
Well, exactly. At the same time, they can't afford a big fall, because it has impact on the upstream and downstream business. We're already seeing negative growth in terms of cement, steel business. We're already seeing negative growth in terms of home appliance and business. So they want to make sure that the recovery in volume can support consumption going into the next year.
Let's talk a little bit about Hong Kong as well, as we are talking about property. And I've got a report out suggesting, at least from one brokerage, that we could see a 10% decline in rents. We're talking luxury rents here as well. What's your view?
Well, if you go back to 2008 and look at the trend, home rents, rentals and property price, they move in sync. So if you are expecting property price to drop 10 to 15% next year in Hong Kong, rents will fall likewise. I think the situation now is that we are already also seeing some cases of retrenchment in the financial sector. That's going to affect people negotiating a rental as well.
Wee Liat, thank you so much for joining us.